guys, welcome to my channel Investing Untangled. Hope you're all doing well. On this channel, I post detailed business and stock analysis videos and also educational content about stock market investing. And if this is something that interests you, then hit the subscribe button and the notification bell and follow my content here. In this video today, I'll give you an update on Alibaba's earnings and what has happened to the stock ever since these earnings were reported. Alibaba is my biggest position in my own stock portfolio, and I keep constantly track of this company and what is going on at the operations level and what kind of numbers are coming out. So right now the stock trades at $212.54 as of recording this video, and here you can see the stock actually crashed after the earnings were reported, and right now it is at 212, and it came down all the way from 225 to 219, and it fell down to $205 on this day when the earnings came out. And the reason why this happened was because of this. So for the first time on a quarterly basis, Alibaba reported a negative earnings, and this freaked the Wall Street out and investors started panicking and selling off. But just by looking at these quarterly numbers, it doesn't give you the whole picture. So I thought of making this video to give you a detailed impression of what actually happened. So if you look at the financial data that came out, so starting with revenues went up from 114 billion RMB to 187 billion RMB. And on a year-to-year basis, you see from 509 billion RMB to 717 billion RMB, registering a 41% year-over-year growth in revenues, which is phenomenal for a company as big as Alibaba. So you can see the market cap of this company is 576 billion, and a company of this scale registering 41% year over year is just insane growth. Now, this is the reason why Wall Street investors freaked out and sold their shares. Income from operations actually went down on a quarterly basis. But if you compare this on a year-to-year basis, there was only a 2% decline. And now the important thing is why this happened. And if you go to the footnotes here, which is number 3, this is the reason. The company says this included the anti-monopoly fine in the amount of RMB 18 billion, which amounts to 2.7 billion US dollars. And I had previously made a video explaining this fine. This has actually been the biggest fine in the Chinese stock market history. And this is again a one-time thing. So investors have a very short-term perspective generally. And this is why these kind of stock crashes happen. So clearly this was a one-time thing which led to this loss. And if you look at net income now, again on a quarterly basis, there was a loss. So from 348 million RMB in this quarter, there was a loss of 7.6 billion RMB, again because of this fine that Alibaba had to pay. But if you look on a year-to-year basis, you actually see an increase in net income. So from 140 billion RMB in 2020, the company registered 2% increase in net income. And this is adjusted for this fine. And this is again a one-time thing, so this is not going to happen all the time. And on top of that, the company registered a 41% year-over-year growth in its revenues, which shows a very strong indication of a very healthy business and expanding business. Now, looking at a breakdown of revenues and what kind of growth Alibaba has actually registered in this 1 year, you can see here year-over-year growth, and you see most of it is actually double-digit growth, which is very, very good for a company of the scale of Alibaba. Total core commerce growth was 72%, with its 37% cloud computing growth and 12% and 18% respectively in digital media and entertainment and innovation initiatives. And Alibaba also recently acquired a giant grocery store chain in China, which is called Sun Art, and excluding those revenues, there was a 40% revenue growth. Now, this is the supermarket chain that Alibaba acquired. They spent $3.6 billion to take control of the Chinese supermarket giant Sun Art, and this actually increases further value of the company of Alibaba, and you can see that already increases their revenues by quite a bit. Now, if you look on an annual basis, so year ended March 31st, 2021 compared to March 31st, 2020, so 1 full year, and here you see what kind of strong growth Alibaba has actually experienced. So 42% growth year over year in their core commerce, 50% year-over-year growth in cloud computing, and 8% and 7% growth in digital media entertainment and innovation initiatives. So overall, a 41% year-over-year growth. Now, another thing that I want to show you here is actually the expenses, the expense report of Alibaba. So year-over-year increase in expenses was just 3%. So from 54% to 57% in cost of revenue. Product development expense was more or less in the same range. It actually even went down a little bit to 5% from 6%. Sales and marketing expenses also were in the same range, 11% compared to 9% last year. And general and administrative expenses were also in the same range of 6% compared to 4% last year. So what this means is that expenses of this business are not really increasing that much, but the revenues are expanding and increasing at a very, very significant rate. So what that suggests us is that that will in turn generate higher free cash flows for this business. So this business is very healthy, and this is a business that will keep growing for the years to come. And this company over the long term, in my opinion, will turn out to be a very strong compounder. And obviously, I'm not the only one thinking about that. Super investors in the world like Monish Pabrai, who runs his Pabrai Investments Fund, also invested in Alibaba, and he bought $38 million worth of Alibaba shares recently, and it was reported in his 13F filings. I have previously explained Charlie Munger's investment in Alibaba. So Charlie Munger also invested in Alibaba, and he also invested $37 million in Alibaba. And Charlie Munger especially is a very, very conservative investor. He doesn't really make a lot of moves in the stock market. He rarely invests and buys companies. And here you see he actually recognized that Alibaba was a great opportunity, and it still trades in the same price range, actually even lower than where these investors bought the stock in. So in my opinion, at these prices, Alibaba looks like a very attractive opportunity, and I have been myself buying more and adding to my position in Alibaba. Let me know in the comments below what you think about Alibaba, if you have been buying or selling this stock, and I'll be sure to follow up with you. If you got some value out of this video, please consider leaving a like and subscribe to this channel, Investing Untangled. That'll help my channel a lot. For future videos like this and more educational videos on stock market investing, stay tuned to my channel, and I'll see you in my next video.